this trading technique here, it's not as, I do make money with this setup, but it's a little bit difficult to explain unless you're in live market conditions. Like, I really suck at describing what happened in the past. Where I'm really good at is throw me in a live market environment and I'll trade my way out of it. Okay, that's where I make my money at. So, I mean, I'll try to explain it with past information, but you have to actually see this on a chart to see how effective it is in working. So, the first one let's go over is tick extremes. So, evidently some market is open somewhere. That's TradeStation going off. In TradeStation, the symbol you're going to need is called cash sign TICK. Cash sign TICK. This is just the NYSE up and down issues divided by each other. Anytime you get a positive 1,000 tick reading, fade that. Fade the first one. Always short it. Okay? Always short it. So as soon as you get plus 1,000, short that bad boy. Don't even think about it. Use about a 10 to a 15 point stop and then just gently scale out of that. Okay? Also on the downside, if you get a minus 1,000 tick reading, buy that. Okay? It's just a fade. All right? You always fade the first one. Now, let's go back to our first example. We had a 1,000 tick reading one time. We shorted it. And then let's say we covered it for a small profit. If we get a follow-up 1,000 tick reading, don't short that one. What the market's telling you is it's strong and it's going to go higher. Okay? It's like an RPM gauge. All right? It's building up pressure. It's going to go higher. So after the second 1,000 tick reading, let the ticks come back to you, and then you're going to buy the second ramp up. All right? I call them tick hooks, and here's what they look like. They look like this. What I do is I take a 2-minute chart, and just a bar chart, and then I overlay a 1-period moving average on top of them. Okay? That's all I do. A 1-period moving average. So on the first 1,000 tick fade, this is where we faded it. We shorted it here. This is the tick. And then obviously it went lower, so we made money on that one. The second 1,000 tick reading, we're going to go with. All right? But we're not going to go with it when it hits 1,000 because that's an extreme. So what we want to do is we want it to come back. We want it to pull back for us and then hook up. Does everybody see this hook right here? First, does everybody see this second 1,000 tick reading here? And then you can see it pulling back, pulling back, pulling back, and then it goes, okay, I'm going to try one more time. That's the first tick hook. Okay? And then it tried. It actually went to 1,000, but we didn't get in there. And then it said, okay, I'm going to roll back over. I'm going lower, lower, lower. Okay, I'm going to try one more time. So that's the second tick hook, okay? So I get in right here at the second tick hook. Here's another example. 1,000 tick reading. It pulls back. There's hook number 1. Boom. There's hook number 2. Boom. Does everybody understand the concept? It's pretty easy if you see it live. It's not the best thing in the world to teach with, hindsight. You have to actually see this little thing flickering and hooking up. It'll look like this. It'll look like a little worm on a hook, and and you're like, okay, here's the first one. And then you want it to close on the second one, and then you're like, boom. This is good for someone that makes decisions quickly. If you do not make decisions quickly, do not do it. You will just lose money. Okay? And I know this sounds sadistic, but in order for me to make money, I have to take money from someone else. If it's all you in this room, I have no problems with that. It's just what it is. I mean, in futures trading, it's a cutthroat business. You're not in the business to make friends and stuff like that. We're pretty much in there to make money from other people. All right? Now, it's not always you're competing against them. A lot of times, mainly you're competing against yourself, not overtrading, not churning, not chasing, stuff like that. All right, so that's a profitable setup. Let's see if I can find a couple more profitable setups that you guys would like. Okay, rubber band trade. All right, rubber band trade consists of 2 LRCs. All right? A linear regression channel. A linear regression channel, don't ask me what it calculates because I don't know and I don't care. But what you're going to do is you're going to put 2 of them on your chart. One of them is going to be 1 standard deviation. The length of it is 30. The length of the LRC is 30. The standard deviation is 1 for the inside and 2 for the outside. So this is the center point, this yellow line. This white line and this white line is 1 standard deviation. This purple line, this red line, is 2 standard deviations. So the theory of this trade is it's kind of like a rubber band. So like if something gets stretched to a point, it's going to eventually snap back, right? So that's the theory of this trade. So all we're doing is we're looking at it and we're going, okay, when I trade outside of my 2 standard deviations, the likelihood of me coming back and snapping back is relatively high. But I'm going to wait until at least it comes back to the first standard deviation. So the first criteria for this setup is a trade outside of 2 standard deviations. All right. As soon as I get another bar that closes or touches 1 standard deviation, boom, I'm in. So in other words, I'm in at number 2. My stop is going to be the low of 1. My target is going to be the midline, and then the first standard deviation. Questions? Any questions? Everybody got it? All right. Go ahead. I do set 2 targets. I set the first target is at 3, and second target is at 4, and then I keep one for a run or 2. Yep. All right. So there's the setup. There's the settings you're going to need for that. So you can see that it's a length of 30, 1 standard deviation, -1, 30, 2, and 2 standard deviations. That's what you'll need. If you guys need these slides, you can email support@tradethemarkets.com. Tell them that you were in Vegas and you want the slides. And tell them you want mine, because that's who you're listening to right now, Hubert, Hubert, and they'll hook you up. All right.